Hello everyone, welcome to our YouTube channel, and in this video I will be explaining you a very good strategy that is known as short butterfly. It's probably very similar to long butterfly, but I will talk that in the explanation. So before we begin, if you have not joined my Telegram channel, please feel free to join. I do post regular daily stock market updates on my Telegram channels, and very soon I will be posting live examples of some of these strategies from which you can understand this much better. If you are watching for the first my videos for the first time, please do subscribe because I come up with videos every single day for educational purposes. And once you join my Telegram channel, you can actually see live stock market updates too, with with taking down the best news from all over the world. So let's begin about short butterfly. So short butterfly is another strategy from the butterfly series. Butterfly series were actually designed for neutral strategies and also designed for range bound markets. And this is basically very similar to a ratio spread, and it's a limited profit, limited risk strategy where selling options is also involved. So the construction is very simple: sell one in the money call, two out of the money call, and sell out of the money call. Now this can also be constructed slightly differently, like sell at the money call and then out of the money calls. But this is since this is a debit credit strategy, neutral. I'm sorry, it's a credit strategy where you actually receive credit to enter the position. That's the reason this is usually used with caution here. But please do remember that this is a limited profit, limited risk options trading strategy where um, there is no possibility of an unlimited risk because you are completely protected. Just like other butterfly strategies, the ratio should always be the same. So that means you are selling one ITM call here and selling one OTM call here. Now, what you have to keep this in mind here is this should be constructed in such a way that this should be credit spread and not debit spread, because there's a lot of reasons why I keep saying this, because many people do understand this wrongly and set up based on the construction what you see here. So sell one in the money call, buy two ATM calls and sell OTM calls. Once you understand the logic here well, then you should be able to construct it very easily. So here, as per this example here, and in Nifty, um, as you can see, this is the yellow shades are in the money call. So if you sell 195 here, 10,800 ATM, the best way should be to enter 11,000 calls. Okay, because 78 into 78 you have to mention, so around 160, 156, and then you sell two here, and then you sell one more somewhere here, 41. So this 41 plus 195 and 196, that's probably around 236. So you have received 236 as premium, and 160 is your total which you have given it out. So the total risk involved would be that difference in this buying and selling. Now, since this is a net credit strategy and also a neutral strategy, if the markets are stuck in a particular range, you should make money from the call options. Now, exiting, now this is very important. Many people know to enter a strategy, but they do not know when to exit. The best way I can tell to exit a strategy is to exit whenever you see 0.5% or 1% of the blocked margin. So in this strategy, if 1 lakh rupees is blocked, then exit whenever you see 500 or 1000 rupees profit. That's nothing but 0.5 to 1%, which is very good. Even if it is in intraday or within 2 days, if you see a net credit, then I'm sorry, profits, then that would be the best way to exit and then enter a new position. So again, butterfly strategies in general are applied, are neutral strategies which should be applied on range bound market. So if you do know the range, so for example, if the markets are going to be in a range, in a particular range, then this can be applied. This can be applied on both sides too. And if you are slightly bullish, then you can apply it, you can put it on the put side, or you can also construct it on the at the this can differ, as I told you, but the premiums will be slightly less in that case. So that's something which you have to keep this in mind, and preferably you should enter butterfly strategy, this butterfly strategy at the beginning of the month, because of the premiums which you can get, or you can also do it in the next month too. So I'm just saying, that's just an advice from my side. So this is about short call butterfly. The total risk is the difference between these premium, the total sell and the buy. As I showed you in the example here, that is the difference. That is the total risk involved in case markets moves violently on the call side or towards upward direction. So that's pretty much about it. So that's pretty much about short butterfly. If you have any questions, feel free to comment and ask in the description below, and I will get back to you and I'll answer every question which is asked. So also one important thing which I keep telling you, why I make videos on option trading strategies. This is mainly because one important thing which you have to keep it in mind is option trading strategies are mathematics based strategies which works very well, and the reason why you should be aware of different strategies is when one of the strategies gives you loss or is going against your direction, you should know how to manage it, how to adjust it and shift it to another strategy. This might sound very complicated, but actually in real life, this is actually not so difficult if you know what you're doing. So people actually convert straddles into strangles and strangles into butterflies. That's mainly because they have very good awareness about what are the strategies and how you can compare it. So if I'm going to tell this butterfly strategy to someone who is very new to call and put, he may not understand this. That's as simple as that. But if I actually explain it, if someone explains me a butterfly, I would understand it very easily within a snap of a second. That's because I am awareness. I keep reading and I keep sometimes I do keep applying it and to see where it works, where is the drawback, pros and cons of a particular strategy. So one more important thing is these strategies you can apply it in stocks too. However, some high beta stocks, some stocks are highly volatile, and that's the reason there is no upper limit or lower limit in F&O stocks. That's the reason it becomes highly dangerous when you apply. Even though strategies like butterflies have limited risk, limited risk strategy, limited risk. That is the reason you can still apply it. And if you think your stock is going to trade in a particular range, then these strategies can be best utilized. So that's pretty much about it. Please feel free to comment if you have any questions. Thank you, and I will see you again on my next video.